Okay, here's an interesting question that came in again from Robert B. During this discussion. Let's just take, what am I in now? Okay, I'm in the credit spreads now. So let's jump ship a little bit, but let's take that Deere bull put credit spread position. Okay, and it's an 18.2% return. So here Deere is at 379. We're seeing selling the 367 and a half put for 178 and buying a 365 for 140. Net credit of 38.50. It's throwing in a midpoint price. I want to take that out there. Let's just put this at 140. Okay, so it's cleaner. Great. All right. So again, 38-cent net credit off a risk of 250 or a true risk of only 212. Because if even I take the full loss, that 38 cents is already deposited in my account. We keep that no matter what happens. Excuse me. So I can only lose 212 even at maximum loss. Now, this statement question from Robert B kind of drives me nuts. It's not your fault, Robert. I don't mean it that. There are people, investors, gurus, educators such as myself, that teach the credit spreads with flair, for lack of a better term. And their ads are, we're right, 78. Well, they're probably better than that. I mean, we're up at 85, 88%. So they say, we're right 85% of the time and make 100% of profit. I don't like when they say that because it's misleading, thinking you're making 100% profit. They're saying you make 100% of the 17.9% or 15% or 12% you're expecting to make. But Robert, the answer to your question is true. Do you keep all of your premium if you let the credit put expire worthless if your profit is 100% gain? Yes. I sold this for 38 cents. That's already in my account. Did 10 contracts. I got $380 in my account right now. I had to put up the 250 to cover the spread. So on expiration day, both puts expire worthless. I keep the 380 that I received against the true risk that I could have lost if the stock went below both strike prices. I have a 17.9% return. That's it. They expire worthless. That's what you want to have happen. If this was a bull call debit spread, we did an in the money bull call debit spread, we'd probably have to pay 212 or 215 debit, with the potential to get 35 or 38 cents back if the stock was above here, because our broker would essentially buy shares of stock for us at 365 and then immediately sell them at 367.50. We'd get the 250 back. But the debit spread would be another additional 2 commissions. Or most investors, I tend to close my debit spreads early as they're nearing full profit rather than let them do the expire and assign. But the assignment there in that case, the exercising year long to deliver your obligation here at the in the money call at the short on the bull call debit spread, that's the only time you get the max $5 back. If I close even half an hour before the market closes at 4 p.m., I close it at 3:30 and it's still in the money, I'm still probably paying 5 or 10 cents a time value of one of these two options, or the option I'm buying back. So I might only make $4.90 back or $4.95. Still pretty good. Still near 100% of what I expected to make, but the return there is the focus. I've seen too many investors, and I've seen people ask me that question before. I saw someone that was saying they make 100% profit on credit spreads, and they're right 85% of the time. No, they made 100% of what they expected to make, which was 12, 13, 14, 15%. In that case, Lisa, I don't get into this. Okay, so Lisa added as another way to manage the debit spreads, swap to a bullish spread in a different stock. I don't do it that way. Okay, I that's me personally. So what Lisa's saying, hey, Tesla is going against you. You had a bear put debit, Tesla's going against you. I had a bull put credit in Deere, and it starts going against me. She says, swap the profit by, say, doing a bear call debit spread, an opposite trade on a different stock that's going bearish. I'm old school because Ernie taught me, I guess, Lisa. What I don't like to do in my portfolio is say, oh, I'm losing on Deere and the market is pulling down, so I'm losing on my bull put on Deere. Let me start selling bear calls on similar stocks or other things. I want to manage this position to stop this loss from getting bigger. That's my first goal personally. That's me. And that's why you hear me say these things. I don't like to mix stocks to try to repair another stock. And a lot of times, to be honest with you, if I hit that 1% rule and I'm at a 40, 45% loss on my spread of the max expected loss, more likely than not, I'm using number two. I'm just closing the spread. I don't see the need to roll this out with that number four idea of rolling this put spread out to try to repair it. What do I mean by that? If this was the bull put I was in, the stock falls down here to that 1% roll. It starts trading at around 382 or 383. And I close this, and I only take, let's say, $140 loss with a possible max 212. Well, that's more than 50%. I wouldn't do that. I'm sorry. So let's say we take $1 loss, including keeping the 38-cent net credit in that case. I've only wiped out 3 previous trades. Why am I going to potentially roll this spread out? This is my thought. It doesn't have to be yours. I was going for a 14-day trade. And 7 days in, I hit this trigger, and we closed this for a loss of $1. And if my average is earning this amount on a 2 or 2.5 point spread, that only took out 3 previous trades. My other 3 trades or 2 trades expire worthless on Friday, or they're going to expire worthless. They're not in trouble like this one is. Why would I roll this position out to say February 18th, have to go double my trading plan time, or open a new spread that has $1, but I have to go out 35 days, 45 days, or 50 days to try to get $1 net credit to cover this one in this case now that the market's turning down? What I'd rather do is maybe just take that loss that only closed out 3 previous trades, and on the next cycle, I open 4 spreads, bull or bear, that match my criteria, and in the next 2 weeks, if all 4 expired worthless, happens frequently, then what have I done? I've covered this without saying in a stock that I was in the wrong direction on, or trying to manage it with a different stock that was showing a bearish trend. I don't like swapping stocks to manage the other. It hurts my brain. It's great that you can do that, Lisa, and it's great that you saw that way to merge a spread into another spread from last week's discussion. But to me, that's just too much. I'd rather just get out of the deer position, take the loss, and make it back with my trading plan that's meeting my targets, rather than potentially try to change my trading plan by having to roll this put out another month, or get that $1 back by creating a new bear call credit spread on the position. I tend in this strategy, those 2-week out bull puts, I'm just doing a trade on a stock that matches my criteria that I think is going to be good for that 14-day period and is going to expire worthless. If it doesn't, rather than try to keep managing this position because I think, I have to get deer to break even, I'm more likely just to close it, wipe out 2 or 3 previous trades. That's fine. That's why I use that 50% control. I don't let it go to 80 or 90 where I might be wiping out 6 or 7 previous trades. We're going to stop it early, and I can make that back in the next cycle when I open 3 or 4 new trades if 3 of them expire worthless. Okay, so I'm not married to just keep continuing to use. Now, I understand with what Lisa brought up to us last week with that rolling a credit spread into an existing credit spread, or discussions on just trading credit spreads on SPY or SPX, that I get. You're just constantly trading SPY and you're just moving the spreads up and down or allowing them to expire, opening new positions. That's a different approach. I'm opening bull put spreads. That's just me personally. A number of ways to trade every strategy, right? And there's nothing wrong with doing what you're doing, Lisa. It's just I'm saying when you hear me say that that's not what I would do, it's because my approach is different. We have a criteria set we like. We're not married to these stocks. I'm not planning on having them convert or take assignment and convert them to a stock position or a covered call. I'm using it solely for the income. I don't care about the stock. I'm not going to trade deer for 6 months in a row every 14 days. It's just this cycle, this matched my criteria. I don't want to change my trading plan just to think I have to get back to break even on deer. I'm going for the long term for that 87, 88% success rate on the positions, averaging 14, 15% profit on the positions that expire or can be bought back cheaply, and never keeping the losses on those 12 or 15 times that a loss does occur till 50% of the maximum loss that could be occurred, so that each time I take a loss, it might only be wiping out 3 previous trades, maybe 4, and I can make that back in the next cycle. Well, I just want to remind everyone, of course, that today's material are my thoughts on your questions designed for educational purposes, increasing investing performance, and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or trading suggestions. Options, as we've seen, do involve risk and may not be suitable for all investors. you like some of the tools you saw today, you can take a 14-day free trial at any time. Just put in your first name, last name, and email address. Go to powerup.com, of course. You'll see that form there, and you can have a full access 14-day free trial. No credit card is required. It's completely free. There's no risk of being charged after that. However, if you do decide to subscribe after that, our subscription level start at just $45 per month. The delayed data service, 13 to 15 minutes delayed, is $65 per month. And of course, we do offer the real-time service as well. We saw some of the webinars today. You can check out our free archived webinars. Go to powerup.com, click on the free webinars tab. You'll see categories for tools, strategies, concepts, and requested topics. That's going to get cleaned up in the next 2 weeks. By February, we might have not necessarily a different view, but we'll have a much cleaner view of the important ones. We're going to clean out some of the old ones, put in some of the new ones, and get that on target. Of course, easiest way sometimes is just to go to YouTube and use that search function. We saw search for debit spreads, search for credit spreads in that case, and you'll be able to see which ones that you want. You can search for calendar spreads or diagonal spreads. You'll see those there. Of course, if you have other questions, send me an email to anytime to support@powerup.com or support@radioactivetrading.com. You can also call us during market hours at 302-992-7971, and trial members and subscribers could always schedule a free coaching session.